It's time to mind your business with me, Jamillah Lodge. Tune in to find out how to mind your business with BEDC, special guest entrepreneurs, industry experts, and more. Brought to you by BEDC. Bermuda business starts here. Welcome to Mind Your Business.
What up, Jamillah?
I know. I'm excited. I got my team.
It's about time you actually got me on this thing.
You know what?
You know what I mean?
It's not about you. Okay, for the people, I have with me Tahkeesha Welch and Donte Hunt, and we're going to be talking about financial literacy.
Yes.
You both work for BEDC. Donte, you're the director of micro, small, and medium enterprises.
Nailed it.
Tahkeesha, you're the loan portfolio management officer.
Yes, I am.
And both of you are fanatics about money.
Absolutely. Well, yes.
Well, I mean, I
about
think you can say everybody in the world is fanatic about money. Well, I am totally, and we both are. We're totally passionate about financials.
Yes.
I call it being financially forensic.
Yeah.
As an entrepreneur, because it is the most important skill. You know, it's sort of like that 80-20, 20-80.
Yeah.
You know what I mean? But I think it's more like 95-5, 5-95.
Yeah.
But and it's funny that you say that because a lot of entrepreneurs are passionate about what it is that they do, whether it's providing a product or service. And sometimes the money and the financial part is just like, oh, it's just happenstance. It's something that I have to do, but I don't really like to do.
No, they actually push it to the side.
Yes.
Because for them, it almost takes care of itself. And it's not that important. You know, I see the money. I made the money today. It goes into the bank. And then I take it and use it for myself and for the business.
Right.
So that's it. That's it. It's like a magical thing that happens.
Right.
So, Tahkeesha, from your background has been in banking, right? So, of course, you see the entrepreneurs when they need the money, et cetera, et cetera.
Yeah.
Can you talk to me a little bit about why it's important for entrepreneurs to manage their finances?
Well, further to what Donte said, first of all, obviously businesses, most times they're able to operate and get on with things without actually understanding the numbers. But then it comes that time when you do need that lending. The investment. You may want to sell. You may want to upscale. You may have to pivot. COVID comes or some other pandemic or some other disaster comes, and you actually have to really think about your business and is your business profitable and what can I do and what have I been doing, and the numbers will tell you that. You would know all of that if you just take a few steps back to understand your numbers and become financially literate.
Okay.
Yeah.
So Donte, you say financial forensic a lot.
Yeah,
what do you mean by that?
It just like it sounds, when you're forensic about something, you get in there deep. You detail by detail. You don't let any stone be unturned, type of deal. And that's what you need to be, or what you need to do as an entrepreneur. You need to look at your financials in a forensic sort of manner, and that speaks to sort of the quality of looking at your financials, but it's quantity too. You have to be looking at your financials on a regular basis. I look at my financials daily. And it's almost a panacea to potential stress or strain or worry about because you know what's going on. And in financials, you look at them as they are currently. You can look in the past. And then you can look in the future, and those are the projections, right? So and that's what I spend a lot of my time doing.
So in terms of those entrepreneurs who we support and we serve, what are some of the key kind of financial documents or statements that they should be aware of, Tahkeesha?
Yeah. Well, I think first of all, a lot of businesses overlook cash flow.
Yes.
Definitely. I mean, I would say that cash flow and cash is the lifeblood of your business. Cash is king. So I think that you have to really understand your cash flow. Obviously, balance sheets and profit and loss statements, and your balance sheet would also give an indication of what your assets are. Are you solvent? And then your profit and loss statement, again, that's about equally as important because it will show if you're actually profitable. So you'll see if you're making money or not. So those three key statements are really important in understanding your business's financials and whether you're financially healthy. Because you may be operating on a day-to-day basis and maybe meeting your obligation, or you think you're meeting your obligations, but you may not be financially healthy.
Right.
Yeah.
So, go ahead.
So, no,
you
it's important. When you say cash flows, some people who know sort of financial statements a bit, they've seen them a little bit. They're like, cash flow and profit and loss, they kind of look the same.
Yeah.
They're almost identical. You know, we can get a little bit technical from an accounting perspective. Profit and loss, you have your accrual basis and a cash basis. So the cash basis is like your cash flow. And here's why it matters. If you're in a business that is a service business, and so you get money at the end of the service, right? So it's an account receivable.
Right.
As opposed to a retail store, they get cash up front. You ain't leaving that store
until you pay.
Until you pay.
Right.
Right. So the importance of, say, a projection is understanding that you have an accounts receivable. You cannot say that you have that cash if you don't have that cash.
Right.
So you have to build that sort of, you know, understanding in your projection. So if you have a service business, you can't say I'm going to make $3,000, you know, this month if you have 30-day terms, and then you throw in the persons who don't pay within those 30 days,
Right.
and then you're running after the money, and what percentage of your cash or your clients will be like that.
Yeah.
So, and it's hard to figure out, but over time, you can kind of project it.
Yeah, and you have to build that. Sorry,
Yeah.
you have to build that into your operations.
Yeah.
So that's what Donte was saying. But you have to build that into your operations. How you pay people, how you actually go ahead and get your inventory or whatever. So all of that has to be built in, and that's what we call the cash cycle.
Right.
So there's a couple of things that you have to work. You know, you have to understand to work that in, but that is really important.
So
it's probably the most important thing that you'll understand with your business.
So for those entrepreneurs who are just passionate about the things that they do, sometimes probably a lot of what you're saying sounds like a different language.
Yeah.
Okay. So what is your recommendation to them? Because we know it's important.
Right.
We know we have to be aware of this information and understand our financials, but I'm just not good at it as an entrepreneur.
Yeah.
So what do you suggest? How do I get a hold of this, and how do I begin to build my understanding?
Yeah. Go ahead. I'll let you.
Well,
go first.
the other thing too, while individuals say I'll get an accountant.
Yeah.
Some people can't afford an accountant.
Yeah.
And then even if you have an accountant, you need to be able to read what they're doing.
Absolutely.
With the statements that they're producing. You cannot just leave them in a silo and say, okay, it's all going fine. So you get back to square one. You have to know financials. If you want to be a CEO and have your business a proper CEO, a CEO that we see on the Fortune 500,
Right.
Or S&P 500, then you're going to need to know financials. Suck it up and learn it. I tell all of my clients that, please, you got to learn it. And how?
Well, I mean, we help. Certainly
Yes.
at BEDC, we offer courses and classes, and then we also give business advice. Everything's at your fingertips. You have everything on the internet. There's absolutely nothing.
YouTube College.
YouTube College
Google
will
University.
teach you. This is not
ChatGPT.
seriously AI it up.
Serious.
But you need to understand it. It is right there for you. It's no longer good enough to say, I'm doing okay. My business is doing okay. I'm being able to pay my people. No, it's no longer good enough. In order for you to actually be a profitable business, and you're in business to make money. I know, everybody goes into business. I mean, ultimate goal is to make money, retire, be rich, whatever. So in order for you to do that, you have to
understand.
You have to understand.
Yeah.
And seek people out that do.
Right.
And then you have to take your knowledge to the next level so that you're understanding exactly what they're talking about.
Financials it's like a guide. With my business, almost every decision I make, every single decision I make, I revert back to the financials.
Yeah.
I say, financials, where are you? Let's have a conversation. We're thinking about X, Y, and Z, and how should we do it? I'll give you an example. Just happened yesterday. We've got to buy some stuff, right? And the question is, do we buy a large quantity?
Yeah.
Or do we buy a smaller quantity? The large quantity, it's cheaper per item. So that makes sense.
That makes sense.
Yeah.
But then it's a chunk of cash. Right?
Yeah.
We have the cash.
Yeah.
But then the smaller one is more expensive per item, but it's less cash.
Yeah.
my decision fell on the cash.
Right.
Right? Even though I was paying more per item, I wanted more. I wanted to maintain my cash flow. I wanted to maintain my cash reserves. Why cash reserves? Rainy day fund.
Right.
You know, something breaks down.
Yeah.
Blah, blah, blah. I don't want to dip into my depreciation fund.
Yeah.
And these are all things that, you know, you should have in your business. You know, cash put aside for depreciation, for when things, you know, run the course of their life and you need to buy a new one. Because you don't want to loan for that.
No, you don't.
You want to self-finance.
You would like to, yeah.
So you mentioned depreciation. What are some other kind of financial concepts or terms that every entrepreneur should know?
Go ahead. Assets, liabilities, profitability, what that actually means, solvency.
What's solvency?
Basically, if you're financially healthy, and typically is used for a limited company. So most small
Entrepreneurs, sole
small
proprietors.
entrepreneurs, so proprietors, it wouldn't necessarily, wouldn't be a measurement that is used to determine whether your business is healthy. But for limited companies, it would definitely determine whether, you know, if you owe more than you actually have as an asset. So that means you're not solvent.
Right.
So that's solvency. Also, there's a lot of ratios. There's cash ratios. There's what else can you say? What else?
Well, no, the basic one for the entrepreneurs is the difference between revenue and income.
Yeah,
People use them interchangeably.
They do.
You know, revenue, net profit, net loss, cash position.
And they're not the same.
Right.
Revenue and profitability is not the same.
That's
so
right.
again, but you think that people think they are.
We hear it all the time.
Yeah,
Entrepreneurs are like, "Oh, I have money in my account," and you're like, "Well, have you paid yourself?
Yeah,
have you paid your bills? Have you paid like?" And then by the time they're like, "Oh, wait," and you realize once you look at your
Yeah.
that you might be subsidizing your actual business. Like you're not
Exactly.
making any money.
You're not.
And
You're not.
and a lot of entrepreneurs make the mistake by thinking that the net profit is their salary.
Yes.
Right.
The net profit is the business's money.
It's the
I
business.
earn the
money.
business.
Yeah.
Separate personal and business.
Business,
Separate
yeah.
it in your bank accounts and in your mind. So the business pays you.
Yeah.
And that goes on the expense
Yeah.
side of your profit and loss. Right? So you have an expense line for your salary. Everything else at the bottom, the net profit, hopefully it's a net profit. The net profit
If
is
it's no
you put
bracket.
it in the bank.
Yes.
And then that gets divvied up to depreciation
Yeah.
fund, to savings.
Yeah.
You know, that business savings, right?
Yeah.
So you can give yourself a bonus from the business. You can say, "Hey, self, so could I have a bonus?" Go boom. Yeah, you could do that. But that's how you have to get your mind in that sort of segment.
You have to
Because
program
once
yourself.
You have to once you scale up.
Yeah.
Because you're going to be successful. Once you scale up, you're going to be successful if you come to BEDC.
Definitely.
Anyway, what am I saying? If you
Scaling.
scale up,
Yeah.
you move from a sole proprietor to a limited company. You might have directors. You might have a board because you're making millions, and you get a board of directors who are individuals in that industry, and they can help out, and maybe they're partners in some capacity. So, and that separation will be
Key.
will be there. So train yourself in that way. I have to say, I feel short in this seat. I do. No, because I'm looking and it's just
Donte,
and you're looking-
nobody cares.
I am
So-
to your wedding. I am really not that short.
You are short.
I was like, what is he saying?
Always,
Hands
right?
straight out there. Hands straight out there. Okay. This is bothering me, you know. Look at them and say. Anyway.
You know what's not short? Your money. No, let me.
Your money's not your burden.
Okay, reel it in.
Okay,
Focus.
okay.
Financials.
So, in terms of entrepreneurs, right, who are listening and they're understanding the importance of financials and financial statements and understanding what it all means, what are some of the key? First of all, when should someone be concerned about this? Like, I'm just starting out my business. I don't need to worry about that. I got one bank account. I'm just gonna move forward.
You do.
When would you
From inception.
Okay.
As soon as you're considering, obviously, you know, entrepreneurs are dreamers. Yes, I want to have this business. I have this great idea. I'm solving a problem. You know, whatever it is. That's the idea. That's the conception. But how are you going to get there?
Right.
Do you need investment? Do you have the money? How can you meet your obligations? What's your break-even analysis? How are you pay for inventory? Do I need a truck? All of those things require money. Every single thing you need for your business to operate requires money. So you have to have a complete, full understanding of the financial side of things. Or if you don't, you have to have somebody on your team that does, but you have to have an understanding. If you're the business owner, like Donte said, the CEO, and it's your business, you better understand.
Right.
It's no way around it. And it starts from the beginning.
And what are some easy ways to do that, to create that kind of separation?
Separation between what?
Between your personal and your business. So if I'm starting
accounts.
Accounts.
exactly.
And it doesn't have to be a business account.
Right.
I mean, that's just a name.
Right.
It does the same thing, just a separate account that you funnel money in and out of.
Well, the banks prefer that it's a business account.
Well, sometimes when you're first starting out,
it'll be a personal account.
You may not, you may not qualify for a business account, but it doesn't matter. I mean, and even if you do,
the key is to have the separation.
Have the separation.
You know, you're not going to the grocery store with your business account, right? You're only doing business stuff. Revenue goes in it. You pay bills from it. You save in it.
And I always ask entrepreneurs, startup or existing entrepreneurs, if you make $10, how much of that money has to go right back into that business in order for it to operate? I just want to know if you know that.
Right.
That's a basic question. If you can't answer that, it could be $100. How much of that money is required in order for your business to operate?
Right.
And you'll be surprised if you ask some people that they don't know. They don't know.
I want to go back to the question just before this, which was when should an entrepreneur or budding entrepreneur learn financials? I'll say this: every business idea that goes through this crazy mind of mine, I don't start with a business plan. I start with financials, projection. I have to start with the projection because that will tell me if this business idea is financially sustainable. And if it's not, I can't do it. My dreams and of that particular idea are, let's say the dreams are gone, but the dream is still there. Maybe it's a different type of the thing that you want to do. But the financial projections will tell you if there's one critical mass, enough people that would want to buy this. You're going to say, how does the financials do that? Well, you're going to have, the financials tells you that you have to do some work. It tells you what you need to research. Because when you think, okay, you're saying you sell widgets. Right? And you're saying, oh yeah, a lot of people like widgets. But the financials are saying, well, how many though?
Right.
Because you got to be right. Because if you're wrong,
you're going to waste money.
That's right. So now the financials have told me I got to do some research. I've got to do maybe some surveys, maybe, get out of the building, as we call it, and ensure that a critical mass will buy my widgets. Financials come first before you even say, yes, I'm going to do this. Financial projections are saying whether you should do it or not.
Right.
If you get it done right. And it's work when you do projections. You can't just sit down in one evening and just
figure it out.
No, because you got to do some research. Unless you've done the research prior.
And people do that. They'll come and they'll say, "Oh, my business is going to make X amount of dollars." I'm like, "Show me." How?
No, I know. No, where's your projection?
Where's the projections? No, I know it's going to
Well, my mama and them said that they was going to buy it. So
I talked to some people at the Connie game. Y'all, they're going to buy it.
That's another thing. Don't survey your friends and family.
No, let's not do that.
They like you.
Right.
You got to go to people who don't know you.
And the funny thing is they'll be the first ones to be like, oh, I ain't got no money. I ain't got no money today.
They'll be like, look. Oh, that tastes good.
So, I mean, we're laughing and we're making jokes, but I mean, it really is a serious topic.
It is.
So much so that there's a whole month dedicated to financial literacy. So, April is Financial Literacy Month. And although financially forensic is a term that everybody should be paying attention to every day.
I made up that.
Yeah, he did. He penned it.
He trademarked, just in case anybody tries to take it.
It is
Donte Hunt came up with financially forensic.
Said it publicly.
I'm going to need you to go ahead and write the book.
Show. Yes, financial. You can write financially
I'll
forensic.
I'll be your agent.
Yep, there you go.
So, in the absence of your book, what kinds of things are you guys do you have planned for April? We're talking about it here, but what other types of things are you wanting people to get involved in, to learn, to understand, in recognition of April being Financial Literacy Month?
Well, we're having what's this campaign we're doing?
Well, we did a Did You Know?
Did you know?
Video campaign.
Yes, that's going to be
6
run
videos. They're on
Instagram,
Instagram,
YouTube,
Facebook.
Yeah.
If you go to our Instagram, Facebook, so all of our socials, you'll see it. It's starring my wonderful friend here, Tahkeesha, and of course myself. And it's absolutely phenomenal. Then what else we did? Oh, there's some courses that we've got coming down the pipeline. Yeah. We've got QuickBooks 101. Mm-hmm. That's April 22nd.
Oh, nice.
Nailed it. Woo.
Yes, April 22nd.
I pulled that one out. I was like, April, and then it went bingo, 22nd. And then tonight is the Excel
Your Business Workshop.
Workshop.
Yeah.
That play on words.
Yeah.
Excel your business.
All about profit and loss.
All about profit and loss. And we're looking to do some other things. We recognize that this is something that we should do on an ongoing basis.
Yeah.
So this is not something this is not the first or the last time you're going to hear about it. Mm-hmm. We're going to hammer it home. Mm-hmm. We think it's very important. We know it's very important. And we want our businesses to be successful. So this is a passion of ours. So we'll work together to make sure that they hear us.
Wonderful. Yeah. One of the things that I wanted to ask you both was in terms of the business. I know a lot of entrepreneurs get a little overwhelmed, right? Mm-hmm. When you start talking about profit and loss and cash flow and balance sheet and all of these things. I have in the past likened managing your business to managing your household, to try to kind of make it make sense in terms of budgeting. Like, how do you budget to pay for your school fees, for your groceries, etc.? Can you talk a little bit about that, and would that help someone who's just kind of entering this entrepreneurial phase for the first time? Would it help for them to think of it as if they were budgeting for their own home?
Absolutely. I mean, it's a mindset. Mm-hmm. So if you have that mindset already and you're already budgeting at home, you just take that same mindset and you bring it over to your business. Yes, the terminology is maybe a little different, maybe a little bit more involved, but it's the same mindset, and that's what we're trying to change, and that's what we're driving him anyway. That mindset. Budgeting is extremely important as well. Budgeting and cash flow kind of go hand in hand. Cash flow, projections go hand in hand, and it's equally as important as, they definitely balance out each other. So I definitely believe it's the same, and it's very similar. And if you already have that mindset, you're probably going to be successful.
Right.
So
and it also helps. This is like the platforms, the tools out there, make it easy. Right. Yeah. When I say make it easy, like QuickBooks Online is a good one. They have some. It's a paid subscription every month, and then you have some free ones.
Like FreshBooks, I think is free.
Yeah, and they have Wave. I think
Wave. You can Google them and find them. But the point is, if you just start with one of these platforms, they're very user friendly, very intuitive. Hey, you sell a T-shirt, you get $20. You put it in. You put $20 in
immediately
as a credit, right?
At that
you
time,
learn it. You learn it. But I'm just making it as simple. $20, right?
Yeah.
And then you have to pay the manufacturer. You put it in the expense side. Beep, beep. And then you just do transaction by transaction. And over time, you will be generating reports.
Yes.
Right? You say, I heard something about a profit and loss. So you go to reports, profit and loss, and you select a time period. It spits it out.
Yeah.
Right? So over time, if you like just start using accounting software, accounting platform like QuickBooks, which is very intuitive, before you know it, you'll be like, wow, I just did a report.
Yeah.
And I'm shocked. You know what I mean? Go to Google, go to YouTube. How do I do this in QuickBooks Online?
Right.
Boom.
Yeah.
Done.
And like he said, it's easy, and then you'll have an investor. You'll come to BEDC. You may want some money. You may want to learn. Not even that. You may just want to share, and you'll have the information right there.
That's a great point.
That is very important. You cannot expect anybody to invest in your business if you haven't taken the time to invest in understanding the financial aspects of your business.
And understanding
Your business.
Financial
so you want
your business.
That's right. And when you're going to somebody for loan, we're investing in you.
Right.
And we're investing in your business.
Yeah.
So you need to show us
that you know what you're doing.
What you're doing.
That's a great point because individuals don't. We find entrepreneurs come to us and they come to us for financing, and they don't have financials.
They're like, just give me the money. It's gonna be great.
But when you're going for investment, whether it's or financing, whether it's private equity or debt financing, if you don't know that, look it up.
He's going to tell us what it is right now.
Debt financing is from a bank.
Yeah.
Right. You go to a bank, you get an interest rate over a period of time. Equity is private investment into your business, and they get a share. So you're not paying a monthly. Payment.
You're giving them ownership,
partial ownership, and they have a stake in the business. Yeah. But anyway, the point is they're going to ask for financials because what does financials tell you? It's the roadmap, and it tells you where you've been, where you are now, and potentially where you're going.
Yeah.
They need to see it.
Yeah.
So start doing your financials today.
Please.
From John.
No,
wait.
And if you haven't, then you start. And if you need some assistance, you come talk to us. We can give you that initial feedback.
Right.
We're not accountants. We're not gonna take you step by step through that, but we will give you the feedback and provide advice. But it's important.
And I want to go back to what you said because it's required. Like if you're trying to get financing, because we do internal loans, micro loans that we offer that, and
we have
in
a
the
loan
past, loan guarantee
product.
People will come and they're like looking at you like, what don't you understand?
Yeah.
It's going to be great. I'm a great entrepreneur. Just give me the money.
Trust me. It's going to be great. I got you.
And I think if the roles were reversed,
exactly,
and they were the ones giving the money, you want a little bit more than trust me.
I've actually said to a client before, if someone came into your house with the same pitch, would you give them the money? And they just looked at me.
Right.
And I said, that's the answer right there.
Right.
So if you can't say that you would, then you need to go back, sort this out, and then come back to me.
Correct.
Yeah.
So what are some of the biggest mistakes that you have seen when working with entrepreneurs?
From a financial? What do you mean mistakes? Right.
Yeah,
Right. I see what you mean. They either over or under estimate the startup costs. Typically, it's over. Typically, entrepreneurs, because remember, these entrepreneurs' their idea is their baby. Literally, and they want to,
I'm making $1 million in a month.
Yes.
Everything. Beautiful. It's got to be the best. And so there's something called bootstrapping, and getting the job done or the minimum viable product. Try to. You don't want to under.
Right.
But it's.
What can you do with what you have?
Exactly. So I see them, getting too much into debt.
Yeah. They don't test the numbers.
Right.
The other thing that I say this, and had this conversation recently, when someone came, it was another hair salon, right? So I asked them, do you know how many hair salons there are? So what makes you different? Why would people now come to you? What's going to be your share of wallet? And they just looked at me like, whoa. I said, I'm not trying to overwhelm you, but these are things you should know.
Yeah.
If there's 80-something hair salons, and I think it's close to that, and you add yourself in there, so what's going to be the share? How many people are really getting their hair done? So, so you're going to be sharing that revenue with the other 80-something people. So that's what your number should be based on. Yeah, and you should know that.
Right.
Yeah.
The big and it boils down to entrepreneurs not validating assumptions.
Absolutely.
And the assumption is the first assumption is people want this.
Yeah.
And some will say, I just know they want it.
Yeah, because I want it.
I've been walking around and because I want it.
I was in the States, and everybody wanted it there.
Exactly.
So surely if I just open a business
that's
here.
That's a key point.
You know what I mean?
Yeah.
And not taking into consideration that there are millions of people in the States. So if you just got 1% of that million, the business is viable. You come to Bermuda,
It's
and
very different.
It's very different because you don't have that 1% of a million.
Yeah, and
right?
Bermudians are very different anyway. The environment's different, the
Yeah.
economy is different, and I think Donte is right. The validation of the numbers.
Numbers, assumptions.
Numbers, assumption. You have to validate them in some way. You may not be able to right away because they are assumptions, right? So sometimes you can't validate.
You can get as close
you can
as
get
possible,
very
like
close.
research, finding out data points. Another big mistake is not fully capturing all of the expenses, missing expenses out or underrepresenting expenses, like what utilities, like some people might just throw in a number,
right?
But how about if you have a machine that uses a lot of voltage, but you didn't consider it? Right? How about your air conditioning during the summer months? Right? Have you projected for that peak? That all these different things. When I do projections, it actually takes me. I will actually look it over a period of 2, 3, 4 weeks. Yeah. Really, I would put it down. It's done. I think it's done. I'll go back.
Right.
I'll go back in 2 days and just and okay. And now I want to triple, quadruple ensure, because once you flick that switch and you get that financing and you start that business, and you don't want to be like, oh no,
I forgot.
Yeah. I forgot this one.
Yeah.
No, there you go.
And maybe that makes...
that could break. Could break. Your break even could just be shot
away for that.
Yeah.
So, I mean, we can go on and on.
We can talk about
this for hours.
You said we can, so let's go.
we need to come back on.
Yeah.
But the gist, if you had to sum it up, I'll give each of you an opportunity to just sum up why it's important to be financially literate.
Yeah.
Especially in recognition of April being Financial Literacy Month. I'll let you start, Tahkeesha.
Well, firstly, I'll just say to entrepreneurs, we understand that these are your dreams and these are your babies, and you believe in your business. But in order for you, and I always say it, and I ask entrepreneurs all the time, I know you're going into business to be profitable, to make money, to be able to take care of your family, for generational wealth. The only way all of that stuff comes into play is if you understand your business. Every single number, every penny, every dollar that's spent or that needs to go back into the business, you need to know in order for you to be successful. And that is the bottom line for me. And that's in every aspect of the business. Again, like if we're talking about investment, sale, whatever, scaling up, numbers are needed in every aspect of that. So I just want people to learn and to become educated and to just take the time and think about what that means for themselves and their business and ask questions and just educate yourself. Yeah. That's where I'm at.
No, she nailed it.
She did.
I was going to say that. Financials are your blueprint. You can't build a house without a blueprint.
No.
Financials are your guide. You can't get to point A to B without a guide, a map. Financials they are your thermometer. They tell you where you're at a particular time. And financials are your performance repository. It tells you where you've been and what you could potentially change. Yeah. So without financials, you can't do none of that.
No.
Right?
None of it.
So learn financials.
Yeah. You heard it.
Yeah.
Just do it.
No. Just do it. Just do
Don't
it.
mess around. Just learn it.
Become financially.
To be honest,
say it.
Become financially
forensic. Yes.
Right. Trademark. Don't they?
Yes.
Well done. I mean, again, I thank both of you for coming on. It always is fun having the conversation. And look, we make financials fun, right? Because a lot of people are like, oh, no. It can be, and I think the more you learn, the more you understand, the more you're comfortable with them, you can get excited about it because now you can see how well your business is doing, right? And that's what it's all about. So thank you both for coming on.
Thank you. Thanks for having us.
Of course. And we minded our business today. Right?
Yeah.
You can't come on anymore.
I don't want to come on anymore.
No, seriously. Thank you for minding your business with us. And remember, if you don't mind your business,
someone else.
Nobody else will.
Who will?
Who will?
That's why you can't come on. That's why you can't come on. Okay, start again. Remember, if you don't mind your business,
who else will?
See, okay. He is not. He's just kicked off. You get one more time. Sit down.
It's so close. I'm so close. I've been saying
just say who will.
Who will?
Yes, okay. And remember, if you don't mind your business,
who will?
Exactly. Thanks for tuning in to Mind Your Business with me, your host, Jamillah Lodge. Tune in next week, Thursday at 4 p.m. because if you don't mind your business, who will? Mind Your Business is brought to you by BEDC. Bermuda Business starts here.